Hey, welcome back to the Broker's Voice. I am excited today. I have the one, the only Warren Cleveland joining me from the Brokers or on the Broker's Voice. Warren is the founder of ReNu Insurance in South Florida. He is a commercial insurance advisor who also specializes in benefits. But I'm excited to have Warren on because I think Warren's done a very exceptional thing with his business that very few in our industry is willing to do, and that's become known for very few things. So, Warren, welcome to the Broker's Voice, my friend.
Thanks for having me. Appreciate it, Andy.
You bet. Well, you've got quite the story of how you ended up in the business because I always enjoy what some of us got into it right out of college, but others, came from different careers and found themselves in the insurance industry. Your path or your career prior to insurance was pretty unique compared to our peers. Talk about it.
I don't see it as being the big deal, but everybody else does. So, I'll tell you the story. So from the time I was a little kid and I could point to the sky, I wanted to fly airplanes for a living. Went to college to do it. Got a job right out of college flying, little turboprops all over the country, and then eventually got into flying for Continental. That was great. 737, 757, and then 9/11 showed up, and along with other 6,000 other pilots got laid off, furloughed as they call it, October 1st of 2001. I mean, thankfully to be alive, but now I had to go find something else to do because there were no jobs to be had in that field, given the airline industry. So I became an entrepreneur overnight. Didn't know I was ready for that, but as they say, God gives you lemons, you make lemonade. And I just started business building and understanding what it took to be an entrepreneur and growing as a person. So,
were you flying internationally?
I was, yeah. That's what I like to do. My seniority number came back in like 2004, and I stayed out for another year, and then tried to go do both, run a business and fly airplanes. And flying 777s all over the place, and it just didn't make sense for me to continue to work for somebody else. And so I made the choice. My wife and I decided that it was time to, as they say, burn the bridge. So here I am, entrepreneur, 22 years later, still going.
One thing I've learned by working with you is don't get your plane terminology mixed up. If I'm going to fly one style of plane, Warren, what is it?
If it ain't Boeing, I ain't going.
Well, I'm curious. So that happened 22 years ago. How did you pick insurance?
It was actually, I got into real estate first because, once again, another industry where people kind of come from another place to jump into it. And we were, we found a mentor. I say we, my wife and I, because she was at that time, we were partners in building that business from zero, man. From a place of, we didn't have enough money in the bank account. It was a bad spot in the beginning of 2002 to where we are now. So we built that on, just sweat equity. And I just got tired of some of the real estate piece that, there's not a lot of technical, low barrier to entry. And I was playing golf with a friend who was he was CEO of an insurance company. And he's like, we pay these agents all this money and you should go open an agency. And I looked into it. In about 3 months, I decided, that makes sense. We had the agency licensed, I was licensed, and we pivoted the entire real estate team to get in the insurance business. And it just took off.
I'm curious, when you think about, you're in South Florida, your agency does commercial and benefits, more commercial historically. For the folks that might be listening and more the advisors who do not have an office in Florida, what is it like to sell commercial insurance in Florida when you have hurricane risk and everything that comes with it? It's got to be chaotic.
You have to silo yourself a little bit. And this kind of goes in line with other decisions we've made recently, is that we are going to do only a handful of things in our agency. And outside of it, we just don't, we refer to other agents that want that business and can do well with it. That we're not going to just refer it to somebody in a phone book. It's somebody I know personally who I know is going to take care of that referral. But I will tell you this: between the brokers that you would typically buy wind coverage from, their aggregates are getting cut. If you're not in with them in a big way, you're going to be outside looking in, going, I don't have a market, and you won't be able to get it. It is getting pretty bad in our state.
Got it. Well, and you said something there I don't want to go overlooked, which was you realized you guys were going to pick a lane and be okay with if somebody came to you with another need that wasn't something you specialized in, you'd refer it to other agents.
So I've been fortunate to meet some really smart people in the industry. A mentor, Scott Addis, is a mentor of mine, and he did it in his career. Others who run very large private equity firms that gobble up agencies have said it to me. And I just decided that, okay, and it's something I'm very passionate about. So it's not hard for me to just say, look, this is it. And it's not anything else. Is performance-based insurance, right? This whole quoting thing that we do in our industry. And it's just, I don't understand. It's so funny when I come in, when I was in the real estate business as well, and I hopped into insurance, looking around going, the tech in this industry is about 40 years behind. What is going on here? Like, why are we still even bothering with this? And then, that leads to kind of the products. And look, Main Street needs insurance products to be able to operate. I mean, insurance moves the world around and allows people to do things without, having $10 million in the bank, worried about what could happen. So it's needed, but it's just there are agents who are probably better suited or want to do that business versus what we provide is in the performance-based insurance, where we can help a particular business owner or management team become stewards of that, and with safety and risk management kind of take the lead on that. They can now turn insurance spend into income.
Yeah, and I think two things you've done extremely well is, number one, tie your past into your present as part of your branding. I felt the same way when I moved out here to Colorado. What makes me different? Well, there's very few former pro baseball players that sell health insurance, so I'm going to build a brand. You've done the same thing with that, being a former commercial pilot, now selling insurance. You've built it even into your branding around your process with Flight Plan 365, like talking about how, hey, when I flew a jet internationally, we had a flight plan we had to follow. Otherwise, we would not end up at our destination. And the same holds true when you design a effective insurance program. I love that. That's number one. But number two, one thing I preach, Warren, is you have to stand for something. Whatever it is you sell, you have to stand for something. And you, my friend, stand for something. So this is for the employers listening in. Warren, let's talk about fully insured products. If I'm an employer listening to this episode on LinkedIn, and I am I have a fully insured commercial program or benefits program, how is that impacting me today?
I call it the winners are paying for the losers. So you're paying premiums to a for-profit corporation, and their job is to manage their book of business. And if you get a little bit of loss control, risk management out of it because you went and sought it out, that's great. And look, I mean, I still have some of that on our book. I'm not knocking it. We need it, but ultimately, you're never going to see the end of that hamster wheel ever, because it's a misalignment of incentives, right? There's no reason for them to charge you less going forward, even if your loss history is spotless. And it's the law of large numbers, right? You gotta have this big pool of people or companies in a insurance world to make that work. And that's yet another reason why I moved on to performance-based insurance. We're only going to take the top 20% in any particular industry and pluck them out and show them nirvana. It's one of the hardest clubs to get into, but once you're in, you're in. You never want to go back, and you'll look at it in the past, scratching your head going, I can't believe, why didn't I do this 5 years ago?
So you're telling me it's like flying United and I want to get in the United Club. I've got to apply and I've got to be approved. Well, you said something offline that I thought was so well said, and you've said it in your content as well. Is when you're fully insured, think about this. You could be paying for your competitors' mistakes.
You are.
Right? Talk about that for a second, because I think people have seen that in your content, but they're like, I don't understand. Well, what do you mean I'm paying for my competitors' mistakes?
So you're in the same pool, regardless of what industry you're in. You're in, you and the neighbor and the guy down the road and the guy, across your state who's doing the same business, and you're operating your business really, really well, and they're not, meaning they're filing claims, they're not proactive in risk management. So that carrier's insuring both of you at the same rate, or maybe they're paying a little higher rate, but the winners pay for the losers. So the fact that you don't have claims, that carrier's banking on you not to have claims, so they can afford to take the underwriting profit they make from you, or a portion of it, and pay for the person who's got claims and isn't as a good a steward of their risk management safety program. And you are subsidizing your competition, because that carrier looks at their book is just that. It's an entire book of business. They're not going onesie twosies. They look at it from an industry standpoint. So if you're in construction, you're in construction. If you're in retail, you're in retail. Manufacturing, same bit. So the what you get out of a traditional insurance product is just that. You get it's easy to buy. I just shot a video on this. It's easy to buy. It's fairly vanilla, and you're always going to be on the wrong end of the performance side of that.
Yeah, that's a really good point you bring up. If it's really easy to buy, there's probably a catch. And you used another analogy I really liked, which was, imagine you sit down and have dinner with a friend, right? They order a very expensive meal, the market price steak, and you order a more healthier, lower cost option, yet you agreed to split the bill before the dinner. His bill's $70, your bill's $30, but now you're paying $50. Is that fair? Most people would probably say, no, it really doesn't make sense. Well, that's what you're doing with insurance.
Yeah.
If you're managing your risk well, you're a clean group, and your competitor has the same carrier, but they're not, your rates are based off of their performance too.
And this is probably, a friend of mine told me this, in a one-on-one conversation. It's probably a little on the edgy side, but insurance is the greatest form of socialism you'd ever want to see in your whole life, because I'm taken from the winner and I'm given to the loser to offset their, so I can make
and folks, this is the last episode of The Broker's Voice ever recorded, because we are about to be canceled.
Well, I would love to be canceled. I'll take that on all day long. I stand for something, and that ain't it.
But it's true. Yeah, what you said is true. Well, let's talk about this for a second, because, okay, cool. Fully insured isn't your best friend, but I've been told, Warren, self-funding is too risky. Talk about why that isn't always the case, because I think a lot of employers are told that, right, by the broker community. You shouldn't do that. There's too much risk. You're not big enough. Why is that just not true?
Well, it's always interesting to hear when somebody says you can't do something. Like, I am just not that guy, right? I'm going to always try and figure out a way. And then sometimes in the end of the day, maybe there isn't, right? But I'm never going to just say, well, that can't be done, or we never did it that way, we shouldn't do it. So self-insurance, from a true definition standpoint, is really only reserved for the largest corporations, who they have unlimited money to be able to offset, a loss that may occur. The IRS isn't necessarily going to give them a discount or be able to, you can't make those payments tax deductible, because you're not buying insurance, you're not shifting risk or distributing risk. But I just say, self-funding is something you hear in the medical benefits side, versus on the P&C side, moving into a captive, where you are going to move to self-insurance, but you're going to have the backstop, like, stop loss and medical on the P&C, or on the benefit side. You have that same idea on the P&C side. There's, you can buy a fronting carrier, you can buy excess. So what you're doing, though, is you're taking a bet on yourself. You're going to have an entrepreneurial spirit. The people who succeed with this are typically really strong business owners or a good management team. They're entrepreneurial. They're not afraid to take a little risk on themselves. And I'm not talking, we're gonna leverage, $10 million and you're only spending $1 million in insurance. Nothing like that.
Yeah, I like what you said there. So I didn't mean
No.
you have more to say.
No, go for it.
Because what you said there was so profound about the entrepreneurial spirit of insuring your company. Every entrepreneur out there at some point took a bet on him or herself, and buying your insurance through a self-funded arrangement is no different. You're betting on yourself that you are going to be good. You're going to have a clean history. So why not be rewarded for it? I love how you said that.
Yeah, well, and that's the thing. Everybody thinks, oh, well, you're not big enough. Well, I mean, that's really changed over the last, even call it 15 years, 10 years. That's changed substantially. It used to be, well, the concept we're talking about. So for those of you are not in insurance, right? You go back 70, 75 years, considering it's 1950, the worst of the worst got into this self-funded arrangement because they couldn't get insurance anywhere else. And then as the markets, as we call hard markets, products liability was a big thing. You couldn't get products coverage for whatever you were selling or manufacturing. And then, captives now moved from the worst to the best because it allowed those really well-performing businesses to take advantage, and we're not paying for the underwriting profit of a carrier. We're retaining that underwriting profit for us because that's our hard work. That's from a business owner standpoint, that's something I'm going to use to further enhance my risk management and safety strategies. You're a more profitable business. Your people are safer. You benefit from it, exponentially.
No, and I think it's ironic that self-insurance started out for companies with no other option. And here we are, self-funding is the gateway to many options, right?
Mm-hmm.
If you want to give your company more options. Let's finish here, Warren. So if I am a company watching this on LinkedIn and I'm like, all right, I've been told every one of those things you just said, I'm not big enough. It's too risky. I shouldn't, just stay right where you're at with the certainty and safety of my current program because this carrier is the best A+ rated carrier in the market. What should I do? What advice would you give me?
Go maybe take a peek behind the curtain. What are some of the motivators that cause people, I think you and I have talked about that many times. It's a misalignment of interests. I write some of that business that has, the fancy name on the piece of paper, but it is not the focus, nor is it the majority of our business. It's just there. I think business owners would do themselves a huge favor to go look at that option from somebody who is not directly tied to their current program. And I'm not saying you have to come to me at all. I'm just saying I'm sure your phone's rung a few times. Be aware of the guy who's pitching you somebody that says tax savings initially, and they're screaming tax savings. That's a huge red flag. Don't see that being a good idea. This is not, you can get some tax savings potentially, but that is not the reason to do this.
Yeah, no. And I love your tagline, man, that you use all the time. Stop buying insurance, start owning your insurance, and be rewarded for your hard work. I mean, that's what it is at the end of the day. And like you said, if you're a business owner who's entrepreneurial, you've bet on yourself before. It's why your company exists. Why not do it with your insurance? So, Warren, I want to thank you, man.
Thanks, Andy.
For being on today. This was great. If you, especially for any commercial advisors who might be listening in, this is what you guys got to do. Quit trying to be all things to all people. Become known for very few things. Heck, become known for one thing, and let others know that you can help them. But if there's anything else outside of that box, your gift, your genius, you recommend somebody else. It's the best way to build a great book of business. So, Warren, thank you. Everybody else listening in, you know what happens when you get clarity and confidence. You go do big things. So go do big things today. Thanks.
Thanks, Andy.